An unusual thing is happening in the stock market, and it is raising some eyebrows. Shares of shipping stocks, many of them tiny microcaps, have been surging since last week's presidential election. Just take a look at dry ships. The stock is up about 1,500% in the past week. Globus Maritime has soared about 675%, and Sino Global has climbed 450%. And this performance is even more peculiar because the sector has been facing a number of challenges as it deals with global overcapacity and sluggish trade. You may recall the bankruptcy filing earlier this year of South Korea's Hanjin Shipping. So what's going on? Dominic Chu takes a look at some theories and why investors need to proceed with caution.
The stock market has been riding high since the election, and there have been a lot of bets placed on companies in industries that might benefit or be hurt by a Trump administration. But the recent surge in small and micro-cap shipping stocks has defied a lot of market logic. The question is, what is fueling this parabolic move? And traders are offering a multitude of theories on why bulk cargo shippers could be seeing brighter days ahead. Could a Trump presidency lead to a surge in spending on things like roads, bridges, and other infrastructure projects? If that were to happen, there could be a lot of demand for things like gravel, concrete, steel, etc., which could lead to more activity and more revenue for cargo shipping companies. Others believe the move in some of these smaller market cap shipping stocks has to do with technical market factors, like traders rushing in to buy stock in order to close out possible bets on stock market declines. But buyers should proceed with extreme caution, even if you believe that the story is bullish for shipping stocks. Not much can justify a rise, in some cases, by 1,000% in a little over a week. The mind-boggling move isn't just catching the eye of traders. The NASDAQ stock market halted trading of microcap shipper Dry Ships early on Wednesday morning because it was requesting more information from the company about what's happening with its stock. NASDAQ said it would keep the trading halt in place until its request for information was fully satisfied. Dry Ship stock has traded below $5 per share just before the election and rose to over $100 a share earlier this week. It and many other bulk shipping companies had seen their stocks fall dramatically over the last few years, and many are still down a lot since their highs in that span, even with this big rally. Regardless of the possible reasons behind the big moves, anytime you see trading action like this in small and micro-cap stocks, many experts quote that Latin phrase, caveat emptor, translation, buyer beware. For Nightly Business Report, I'm Dominic Chu.